Sanofi shares plummeted more than 15% on Friday. Investors didn't like hearing the French drug maker abandon its 2025 profit target. The company also said its consumer unit could be heading for a spin-off. Sanofi is pushing to spend more on immunology and inflammation drug development. In doing so, it dropped its target for a 32% operating profit margin for 2025 to focus on long-term profitability. One leading analyst said the spin-off would be welcomed by investors, but warned the cuts to earnings ambitions over the next 2 years were substantial. Sanofi expects adjusted earnings per share to fall by a low single-digit percentage next year. It sees a strong rebound in 2 years' time, but not enough to sustain the previous margin target. Sanofi CEO Paul Hudson said the core innovative drugs business had improved enough to soon do without the cash flows from consumer products. Sanofi said the potential consumer listing would be in the fourth quarter of 2024 or later. The company would not comment on further details of the planned listing or whether it might sell the business. Sanofi said it's targeting cost savings of up to $2.11 billion from next year until the end of 2025. The company reported business operating income had dropped by a tenth in its third quarter to $4.25 billion. That was slightly below the average analyst's estimate.